Good morning, buenos dias. Given that we had a late night, many of us, some of us had an all night, I understand, we're going to try and inject a little bit of energy and passion into this debate this morning. Just very briefly, one of our ex-prime ministers said that a week is a long time in politics. For Theresa May this morning, a month is a long time from being so far ahead in the polls. Those of you who haven't heard, in the UK, she's now in a minority government in a hung parliament, which she certainly, and we didn't expect. So a bit like the insurance market, politics is changing all the time. You can never predict what's going to happen next. So why the title of this session? I think a lot of insurance companies talk a lot about customer service. We heard from Ignacio at the start that Mapfre Global Risks have a strategic initiative for quality of service. It's my challenge to these guys and to you in the audience is, do we really understand what our clients want when we talk about service? Is it about documentation? Is it about being on the end of a phone 24/7? Is it about claims delivery? Is it about being invited to join the company to work on projects such as cyber or legislation around multinational programs? You know, different clients have different perceptions of what service is, and I want to try and examine this a little bit more with these guys. Knowing these guys as well as I do, don't be surprised if we go slightly off-piste at times. I'll try and bring it back. I won't accept anybody promoting their own organizations. I won't accept anybody being dull. I'll stop it. We have only got a little bit of time here, so we can't go into a lot of depth. But I just wanted to try and get this debate out, and I'm sure it can continue over lunch or in the following weeks. So, at great expense, we've surfed the market, and we've got the creme de la creme here. We have, starting with Antonio Navini. He's the managing co-director of NL Insurance NV, the reinsurance captive of NL, one of the world's leading integrated electricity and gas operators. Antonio joined NL in 2001. Working before that for Fiat Auto, and has spent much of his career overseas, in mainly the captive domicile areas such as Dublin, Luxembourg, and the Netherlands. So welcome, Antonio. We have, immediately to my left here, Rory McClay. He's the MD of JLT International Network, with specific responsibilities to develop JLT's distribution channels and global service capability on a worldwide basis. He joined Jardine Insurance Brokers in 1991 on the graduate scheme. Worked in Hong Kong in 94, 95, and then to London. And he's been in his current role since 2008, reporting to the JLT Deputy CEO. He's also a member of the boards for JLT's joint ventures in Europe, Greco, MAG GLT, and Marsh GLT, and on the Mexican company board. Chairs the mining specialty group and heads up JLT's international benefits practice. So smart also around, really, a man of many talents. And then, talking of talent, we have Justin Blackmer on the far side. Justin is head of broking for Global P&C at Willis. Started at Sedgwick's in the 80s. In construction, energy, and global development. Has worked in Singapore and Indonesia. Sedgwick's became Marsh, as we all know. Eventually, Justin went to HSBC, built a downstream energy unit. Joined Willis Towers Watson, or Willis as it was then, in 2004, specializing in downstream energy and chemicals. Has a network of global contacts across the industry, a leading player in the market, and this is what Justin tells about himself, actually. So He's been around a while. And then for many of you, Adrian Labrie won't need much introduction. He's the editorial director and co-founder of Rubicon Media, the publishing group with 4 core titles, the excellent publication Commercial Risks Europe, more recently Commercial Risks Asia and Commercial Risks Africa, and the International Program News. So there's not a lot that Adrian doesn't know about our industry. He's a specialist risk and insurance journalist, editor-publisher with 30 years experience. Adrian also hosts events and debates for leading insurers and reinsurers, and has made a special effort today to look smart. We don't normally see him in a suit. We don't normally see him looking like that. He wouldn't go as far as a tie, but we've almost got him there. So let's kick off then. I'm going to sit down and join the group, but I want Antonio to start this by giving us a little flavor about what he needs as actually one of Mapfre's clients, what he needs from the industry and what he means by service. But it won't be long before these guys will jump in. So Antonio, get on with it.
Okay, thank you so much, first of all, for inviting me. As I said, I'm a director of a captive, so actually, first of all, I have a curiosity from the audience. So, first of all, I stand up just a second to ask the audience if any one of you, how many of you have an understanding about a captive? Can you raise your hand? You know anything about the captive? No, not too much. Not too bad. Thank you. We are involved as a captive for one of the leading electric group in Europe for international global programs, and there are so many actors involved in this process, and we have the clients, so represented by hundreds of companies worldwide. In our case, we are in over 40 countries and 4 continents. Then we have a panel of insurers, international carriers, and Mapfre is a leading one. Then we have the captive, and then we have the retrocessioners. And most of the times, the carriers are even playing as a retrocessioners in the process. And finally, we have the brokers involved in the process, and loss adjuster that all of you are represented here in this room today. So from my point of view, I think that even if most of you don't know exactly about the captive, we represent the fulcrum, the trade union between all the actors involved in this process. And for us, it's critical, it's extremely important that carriers, brokers, loss adjusters, all the subjects, all the people involved in the process can deliver a quality services to us. So quality is on top of all, is absolutely important for us that everyone plays well. And then we can, of course, talk about what we mean for quality, because if I should ask you, are you doing well your work? You say, yes, of course, and I'm doing my best. But then we have to measure the quality, what we mean exactly quality, how we can measure the quality, so we can talk even later. So our interest as a captive, we have our own needs, but first of all, we need to be sure that we are working with very professional partners, and the selection of the carriers, the selection of the brokers, the selection of the loss adjusters, etc., is strategic for us. So everyone has to deliver, including myself, including my company, including my colleagues, a very high quality services. So quality is strategic. Then we can even talk about services. What kind of services we need? Traditional services, like I said, we are involved in global programs for property, casualty, but of course, today, in these days, we were talking about new risks, cyber risks, etc. So I'm curious to understand what's going on in the coming days.
Okay. It's a bit of an old-fashioned term, but we talk about personal relationships in this business, and just a question for Aurora here. You know, how come we constantly talk about the need for professionalism in our relationships, be it the broker, the captive, the client, the carrier, and the industry never really has got to grips with this high level of deep working together, almost like a joint venture approach. It happens in banking and it happens in other industries. Why in the insurance industry do we find it difficult to build this sort of professional platform?
Well, I think relationships are all very well, but I think we've got to be providing the right products and services to form those relationships in the first place. I think there was a very interesting survey recently by EMIC, which showed that financial corporations have had 20% of their risks being properly insured in the insurance market, which seems a staggering figure. And such items such as brand, reputation, currency, sort of terrorism to an extent, and of course the great cyber word, which I'm sure we've been talking about a lot. Ultimately, the insurance market is at present, and I'm saying that insurers, brokers, of everyone have failed to come up with these right products to be able to sort of satisfy our customers. So I think we are on the verge of a major change. We have an interesting scenario. I think sort of who'd have guessed that we no longer have CDs to put in our CD players, and we now have iPods and iPhones, and we can't walk down to the local Blockbuster to rent our video anymore. And I think we're about to have driverless cars. Now that's going to be an enormous change. I think it's estimated that 80% of collision losses will be removed by 2035, and that's going to be massive erosion. So what do we do next?
So what you're saying here is that, yeah, relationships are important, but far more important is making sure that we're working with the client on a leading edge, because the world is changing so quickly. Question for Justin. Do brokers allow us as carriers to create investment in doing things for customers and in having workshops on cyber and investing in services? Because you guys push the market down constantly, and is there an end to this? Are we going to see brokers realizing that actually the quality of the relationship is more important than taking another 5% off the price?
So thank you, Chris, for that. To address your main question first, I think brokers do generally strive to build a partnership, to build a symbiotic relationship, because frankly, without the underwriters, without the brokers, without the risk managers, none of us have got a job. So we do kind of need to form a community. Where I think we find it very difficult is to innovate. We provide new products, but often these are products that have been taken out of the old all-risk products and just repriced and rebranded as something else. So do we push the market down? Well, actually, I think what we're trying to do is we're trying to develop products that meet the needs of the corporation. The kind of questions we should be asking, in fact we do ask, are what keeps the CEO awake at night? What stops him feeling safe in his job? And Rory's point about 20% of transferable risk is a very interesting one. I saw a CEO insight of the top 10 risks that really did matter to them, and I think 9 of those 10 were uninsurable. So from that point of view, I think we need to try harder, we need to try better, we need to stop thinking about the old style treaty diktats and we'll sell the market something we produce, but actually to work in partnership and say, well, this is what I want, but I've got to be prepared to pay for it.
I think we're still massively inward looking. I think we've got a situation where the cake is getting smaller. I think so brokers are looking to underwrite and really just use insurer capacity. I think one major broker anticipates that they'll be broking only 40% of their risks into the open market. And at the same time, insurers are looking to disintermediate because they need to cut sort of costs for distribution. I think that there has to be some major disruption sort of fairly soon. And And on the basis that the stock exchange in the UK had their big bang moment 31 years ago, and at the moment we're still paying in London brokers to go into Lloyd's, we're paying them a six-figure salary to stand in a queue. I think that makes you think that there's got to be some major disruption, but I suspect it'll probably come from outside the industry, because otherwise it seems to me it's like, I suppose, turkeys voting for Christmas, I suppose.
Yeah. Well, go in. Yeah.
There's a few things. We do these annual surveys all around Europe and also in Asia and Africa, where we get risk managers together around a table. We're doing one in Italy shortly, Germany in 2 weeks. And what I find really difficult, the first question is, what are the big risks that keep you and your main board awake at night? And the really hard bit is getting the risk managers to stop talking about what these big risks are, because actually it's kind of irrelevant, because they're talking about the risks that you mentioned there: reputation, currency, basically all the risks that fall out of their remit, because they're not enterprise risk managers. They're not CEOs, they're not CFOs, they're corporate insurable risk managers. So you can spend a lot of time attacking the brokers, the insurers, and everybody else in the market for not delivering solutions to what are fundamental business risks that are the responsibility of the chief executive. If you take away reputational risk by providing some amazing parametric cover that actually stops your share price falling through the floor, then actually what you're doing is you're making the company pointless. So what I'm saying is that I don't think that the market should beat itself up too much for not delivering what is actually impossible. Having said that, Rory's absolutely bang on. The products and services that you should be providing to the risk managers should be provided in a much more cost-effective way. You can't have layer upon layer of costs going in there. The combined ratio is what, 98, 99, 100% at the moment, of which 45, 50% is cost, of which 25% is loss, of which 25% is commission, legacy cost. So yeah, tackle that, and then start looking at areas like cyber.
Okay, so what I'm hearing is, don't try and solve the world's problems. Look, focus on what we can do, and then when we've got down to focusing on what we can do, deliver it efficiently so that we take away duplication of costs, and then so you're left with a carrier working with a professional broker, delivering something very, very efficient to the customer everywhere in the world at the right time. Do the market do that? Do Mapfre do that? Antonio, are you
I cannot answer
in
that
the area
right now.
that we deliver? Are you a satisfied customer?
I would say yes, we are satisfied customer. But first of all, I would like to add something about what was said before. That we, from my point of view, we have to avoid a sort of mismatch between what the market, what brokers, what the carriers have in mind, and the customers and the clients, because clients can have different maturity, and we can be a large organization like mine, and we need our time to process and to understand better what are our risks, how to deal with the risks. And so risk assessment is extremely strategic. It's quite important to the group, and there's not a unique way to approach and to face the risk that we have. So today, in these days, we are so talking every time, every day. It's quite popular now, the cyber risk. Even my colleagues, all the times we are talking about that. But there's not a lot of clarity. I think that within this room, once again, we have a different maturity. We have different sensitivity about the risk. So we need to work with a very reliable parties that can really understand the clients, what the clients really need. And not being simply on a commercial basis only, but really, first of all, The partners, I want to talk not about brokers or carriers, but partners, because we need to work together. It's a long-standing relationship. It's a long-term relationship. So, because first of all, you need to understand me.
Yep.
So, invest a big effort from you first to understand the client, what we do, how we do, which is our background, which is we are Italian, we are international company, what we really need. Then let's work all together to deliver the best solution for us. But it cannot come out out of the blue as solution, say, okay, I give you the keys of the car to cover your risk.
Yeah.
No, let's understand together.
So Justin, one for you here, because you hear what and it's quite a common message about understanding the client. Do you think brokers, and especially in London, are guilty of complicating this industry too much? We hear about MGAs and sidecars and wholesale and retail, and actually what the client wants is for us to understand their company and do something a little bit more basic and efficient. Is that fair?
I think it is fair to a degree, and I think we need to understand how to segment business properly. I think for large and complex business, we need to work a lot harder, but we need to be much more efficient on the simple business. We can automate that. We can use InsurTech. We can remove the distribution costs. We can cut the price. But for large and complex, understanding the data is so key. And if you talk to an underwriter about cyber, so I haven't really got the data to model it. You know, it's kind of a new thing for me. So how can I possibly price it without the data? So it's a challenge. I think big data is very important to the insurance market at the moment. You know, how can we build our knowledge and our understanding so we can accurately and fairly price risks? Because frankly, it's all very well transferring it, but we need to have a sustainable product. And if the product that we provide is priced incorrectly, then there'll be no future transfer solution, or there may not be a market at all. So we've got to get that clear understanding. But I think it is incumbent upon us all, and it's a recurrent theme, to work closer with the clients and the markets just to understand what they want.
Can I ask a question, Chris? I hear this point that you made there about needing that long-term relationship to develop this bespoke solution. The larger corporates, most of the companies in this room, I presume, need, and quite right, you can differentiate between the two. For the large complex risk, put together the time and effort to sit down. For the more medium-sized risk, yes, absolutely, use technology, commoditize, kind of wrong word, but you get where I'm coming from, make it more efficient, because it's simpler. So all the risk managers I talk to in Europe, worldwide, yes, give us this bespoke approach. Why doesn't it work? Because at the same time they're saying, well, the problem is the broker turns up, they win the business, and then the man or woman who actually won the account gets promoted upstairs, and then we're dealing with a junior. And not so often hear the same thing about the insurer, but the same sort of thing.
Yeah.
Does it just economically not make sense to have that kind of relationship that the buyer wants? Because the buyer is not prepared to pay the broker a nice fat fee up front. They're not prepared to pay the extra required for you to deliver that long-term, super complex bespoke solution.
I mean, I have to say, I'm not always very supportive of the broking market. I challenge it quite a lot, but actually brokers are better than carriers at maintaining that relationship over a long period of time. You can have people in your organizations who become the CEO who will still contact and have connections with the client.
Yeah, I don't think this is
necessarily.
This is not unique for the insurance industry. I think there's got to be progress in every organisation, and people have got to move on, and there's got to be succession. So I think that it's how that is managed to the benefit of the client, I think, is the ultimate sort of challenge we have. I think we cannot expect sort of stagnation of people in our industry. I think that has got to be a rolling model.
Can I have go on a slightly different route, Rory? You're responsible for global networks. I know from my discussions with Antonio before today that he will get on a plane. He lives overseas. He's moved around the world. He's quite a global citizen. I sometimes look at the insurance world, brokers, carriers particularly. How good are we at servicing customers globally? And not only in terms of physically being able to do it, but culturally able to do it?
Well, I have to say probably, and I apologise to anyone who voted for Brexit or for Trump in the room, but the world is mad, and I think the corporate insurance buyers must find it completely mad at the moment. I think there's increasing protectionism going on to domestic insurance markets around the world. We're seeing a proliferation of sort of state reinsurance companies and compulsory state reinsurances. And it just makes the sort of administration of global programs extremely hard work, and at times sort of a bit of a nightmare. There are obstacles and ambushes thrown in sort of every day. And at the same time, the principal brokers and insurers are actually probably shrinking their global footprint. When our clients are globalizing, so we all seem to be going, sort of general statement, so the other way. And that is for a variety of reasons, and one of them is very much on sort of the compliance sort of restrictions which we all have. There is no holy grail here. I think probably that my major point here is that global account management isn't something which is an add-on and something which is to be done on the side. It is an absolute specialty area, and that we all need to provide specialized, thoughtful, capable people to manage a discipline which is becoming increasingly complicated. So it is a specialty in its own right now.
Yeah. You see it from your end. What does it look like?
I love this topic.
Yes, I know.
Yeah, because when we are talking about globalization, it's a really tricky topic actually. And the first day I understood that Mapfre is becoming more and more international. You have 120 countries. No, in your panel.
Something like that, yeah. That was mentioned by Ignacio the other day, yeah.
So, once again, I want to repeat myself with a word today, that a lot of mismatching. What I mean mismatching? I mean, that's a risk in this. Because as a group, we are working in a very fast market. And the speed is really strategic, again. So we are asked to give a coverage for new countries in new continents in a very short time. So this means that at this moment in time, we need really we need international partners. So it would be no sense for us to work with you for 40 countries, and they are part of your basket. But then when I ask you to give me a coverage in India or Zambia or other countries, so you say, no, sorry, I'm not there. And for me, it's an issue. So what I mean is, all of us, we need to understand that when we are a big client, as I think that we are, and you want to be really an international carrier, for me, first of all, I assume that you are really international. So if I move, my business is moving faster and faster to another country, you have to be there with me. Or even the broker. So it would be no sense for me if you say, our network is not ready yet, or let me start with talking with someone, I give you a feedback in 3 months' time. It's too late for me, because my boss is asking me to do it today.
Yeah.
If I can disagree with you slightly on something, I'll tell you if I dare. I think it's not a question of having flags in the map everywhere. I think that those days are over. I think it's more a question of having strong central control and extremely tight and efficient communication lines for global programs. I think, and going back to my earlier point, to have specialist people who understand what they're doing to manage it. Because it's all about communication. Your point of waiting 3 months for a result for a response sort of coming out of India. India is a nightmare, and also sort of global programs are coming under increasing stress by some crazy pricing coming out of individual markets.
If I may, you are perfectly right. I mean, that it doesn't mean that you necessarily need to cover all the countries. But when initially I say that we have to know very well each other, it means that we need to share our strategy. You have to know where we are going.
Yeah.
So that's why we invest in a long-term relationship, because we need to share, we need to trust each other. So you need to know where, as a group, we are going. If we grow, you have to grow with us.
Yeah.
If you believe that we are a client, an important client, that's the same for the broker. That's the same for a loss adjusted. Maybe it's today here in this room. So I mean that if we want to teaming up together, if we want to be in partnership, we need to avoid to go in different directions.
Yeah.
We go together, we work together, and we need to grow at the same time.
Let me just bring Adrian in briefly here, because in my research, working for Mapfre in London, we see the success of Mapfre in Spain and LATAM, and we're trying to duplicate or bring the best practice into other markets. And every time I talk to risk managers, you talk to more risk managers than I do. Yeah. It's what we're hearing about following the customer, but also it's give me the basics.
Yeah,
give me. Yeah. Can I, when I ring, can somebody pick up the phone who knows who I am, that knows my business, that can get back to me in time? I mean, is it really that bad? Is the insurance industry that bad?
Chris, that is 100% the response you get, because, as I said, when you have a round table, 6 or 7 risk managers around the table, after I've finally gotten to stop talking about currency and global politics that we can't do anything about immediately, then we get on to what we're talking about here now. Now, first of all, you have a big discussion about who's responsible for compliance. And they say, obviously, it's the insurer and it's the broker. And then I turn around to them and say, but it's your program? And they say, oh, yeah, actually, we're responsible for compliance, which is interesting. Mm. But then I say, well, what do you really want from the market to help you to manage your global programs better, to actually say to your boss, it's okay, boss, we're covered and it's going to pay up where we want it and when we want it. And they say exactly that. It's the basics. It's about responding. It's about what Antonio's saying, being aware of where they're going and what that means for their program. And just delivering the bloody policy on time. That's one question we're asking this year in our survey. Will you receive a policy on inception before you retire?
It's pretty bad, isn't
it? It's awful. I mean, I'm an outsider, okay, I'm a journalist. I've worked in the insurance industry for something like 1.5 years, right? And then I became a journalist, and for some bizarre reason I've written about it for my whole life. I cannot believe. I mean, imagine if I used to work on the daily newspaper, Lloyd's List. Can you imagine if we're not putting today's paper out. We're going to put it out maybe on Monday, because we're having a bit of a problem with the printer and the distributor, and just do it.
So Justin, where do we go from here then? Because as Adrian's already said, the market, the carriers are pushing 100% COR. It means it's quite a challenge to get investment whilst the market's in such a soft place. Surely it's got to change, and that'll facilitate this improvement in some of the basic processes.
So, 2 points there, if I may. The first one, I don't think I can let you get away with the observation that the market is soft. Okay. I think the market is cheap, and I think prices are as competitive as they've been for many years. But actually, if you look back at historic rates, sort of pre-9/11, where we are now slightly cheaper, that was for full value policies. That was for policies that included incidental construction. They included terrorism. There was no cyber exclusion. So what is the real like-for-like pricing today? I'm not sure how many terrorism losses get paid in the market, but I know there's a lot of premium that gets generated.
So you're arguing that the market isn't soft, it's cheap, but because our wordings are not flexing to clients' needs, then actually it's got some way to go. Is that what you're saying?
Well, I think that,
Sorry, Justin. But you talked about the late 80s market, or
Late
sorry,
90s.
90s market.
not that old.
And what happened after 9/11? Actually, they had that massive catastrophic loss.
Yep.
But actually, much more significant was the huge reserving crisis that came immediately afterwards, because those wordings were so broad. So if you're using that as a benchmark, then that's surely a suicidal strategy for the market to follow. Is that all right?
So if you step away from that, it's a marketplace. Okay?
Yeah.
So it's a marketplace that generates competition. It goes back to our earlier discussion about whether you get cheap local policies or quote-unquote expensive global ones. The market forces will dictate where the business flows, provided people understand what they're providing and can give you the right service. So to Antonio's earlier point, it's all very well having 150 offices, but if you don't understand each other, they're just another flag in the map. But going back to your point, I worry that our products are not fit for purpose. If we're selling in the large complex space specialist policies to prevent against catastrophe, and as a CEO I sit there and go, but excluding this, I'm not doing that, I can't do this, I'm going to question whether or not actually it's a viable product. Will I find another way of transferring or protecting or managing my risk? I think the other sort of angle there is, the insurance market has close to 100% ratios, in some cases worse, in some cases better. Well done, Swiss Re again. But there's nowhere else for the capital to go at the moment. And if you don't apply market forces by generating more competition, if you can't get any lower on price, then you have to improve coverage or retention. And if you don't do that, then the market won't change, because the naive capital will come in, it will follow the leaders, and it will get the benefit of their expertise. If you try and be a bit more creative and you use retrocessional insurance to buy primaries, or if you drop in certain areas where you have better expertise than others and you force that naive capacity to follow you, you've got more chance of people differentiating and having a better loss ratio, and therefore some of that incidental capacity might go away.
So I'm just putting a layman's hat on rather than somebody who's working in the market. I find this really strange that naive capacity comes in. We've got customers wanting long-term relationships. How do you justify as brokers going to this naive capacity and using it in a market where quite clearly the clients are looking for long-termism, and therefore companies like Mapfre who offer something that's long-term sustainable and don't particularly want to move in the way that this naive capacity is doing. Are we doing this in the right way? Are we acting professionally?
So this, funny enough, I was asked this question yesterday by someone else, and the way they phrased it was, are we seeing brand new capacity with new people, or actually are we seeing people reinventing themselves with new capacity?
Okay.
So there is definitely an element of the reinvention. But I think naive in terms of the long-term strategy to stay in the sector. So from that point of view, a new capital provider will look annually, maybe 3 years.
Right.
Whereas the more established companies, like Mapfre, are looking at the long-term play.
Yeah.
But you have to fight market forces whilst you're there, because something has to keep you keen.
Yeah. So Rory, we've seen overnight changes in the UK. Brexit becomes even more confusing. We see Trump moving around in ways that we can't work out. We've got risk managers out here in the audience. Can you throw out any crumbs of comfort about what the next period looks like? I stood up here 2 years ago when David Cameron got a big majority when I was in Bilbao 2 years ago, and who would have realised that in that period we'd be where we are right now? So is there any hope for some stability in the next period? I know it's a difficult one.
No. As my Spanish colleagues will testify, my electoral predictions in the last 2 years have been rather haphazard. Actually, no, I'll rephrase that. They've been wrong.
Wrong.
So this morning's result, I would say that I think it's inevitable that Theresa May will go, and I think it's probably inevitable that there will be another election in the UK by the end of the year. Now, what does that mean? At the same time, the Brexit clock is ticking to suitably April Fool's Day of 2019.
Yeah.
And this is a period of tremendous uncertainty. And I don't think it's really a question of whether it's going to be a soft Brexit, a hard Brexit, a rock-solid Brexit, or a mushy Brexit. I think it's going to be a shambolic Brexit, and I think there's absolutely no chance that we will be in a position to come to a landing on issues in Europe such as passporting rights by 2019. Now, again, so what does that actually mean? I'd be interested to hear what sort of Justin says, but I think it's inevitable that there will be a further flight of capital out of London because I don't think the insurance market can wait. And I think that will be to the benefit of for European centres, and I think Madrid will be one of the major beneficiaries of that. But I'm very happy to be shot down by my learned friend at the other end.
It's a very apposite point, and I don't see any shock reaction. So far, people have been measured, that they have looked at licensing. For many people in the reinsurance or quasi-reinsurance area, it doesn't actually matter a great deal, just in terms of pure Brexit. But I think you could look at it perhaps as death by 1,000 cuts. Will it become harder and harder to do business in London? And as a result, will people gradually migrate? Then maybe. But I don't see any instant capital flight, because I can't really see that there's anywhere that's prepared and ready for it to go. And these things take time.
It seems, I mean, I've obviously discussed this with various people, including some of the domiciles that are very keen to capitalise on the potential flight. And when you come down to it, really there is no real reason for there to be a flight of capital from the London market. Why would you need to do it? Because you've got operations, you've got branch offices, you can set up a little operation in Malta or Luxembourg, or Lloyd's has chosen Brussels because it's politically better looking than some of the other places that are not actually on the mainland. But that's just politics. At the end of the day, all it's doing is going to add a frictional cost. I mean, the UK is and has always been the most equivalent European domicile anyway. So if the EU doesn't grant equivalence to the UK in some form or another, then that is a seriously big political mistake that they're making there. Because then it's like, well, how come you give an equivalence to Bermuda, Japan, Dubai, wherever? It just doesn't make sense. And that stands. Rory, you're absolutely right about Theresa May. She's yesterday's, just on a purely political thing, the reason why this has happened is because she thought she was so far ahead. She was able to stand up and say very basic things like, you people retiring, you're going to have to sell your houses to pay for your whoops.
Reality.
And she overdid it.
Yeah.
She said all the things that need to be done and tackled to tackle the welfare state because she thought she was 25% ahead because Corbyn's such a lunatic. But actually, Corbyn played quite a good hand and she got wiped out because of it. So it was nothing to do. That election was nothing to do with Brexit, politics, immigration. It was just about leave my pension alone. It was as simple as that. Yeah. And you've got to remember this. That's what people vote for. You know, we talk about all this big political stuff, but actually it's about money.
Okay. Well, look.
Anyway,
we're getting to the stage where we've got 15 minutes left. Just to sort of sum up, and then I'll come into the audience. So, you know, we're hearing from a client here who's, I think he said that he was satisfied with his carriers. However, wants to be closer and wants to feel the heartbeat of his partners, whether they're brokers or whether they're customers, and wants to have a deeper relationship so that we can all really understand where you're going. Some challenges around whether the market delivers some of the basics, and I think some of you will be sitting out there thinking and agreeing with that, and what can we do? According to the market, to the broker, we've got further to go in terms of the softening of the market, so that doesn't give us a lot of encouragement as carriers in terms of finding capital to invest in improving things. We've got a market environment that's totally unstable, although Rory has a history of getting things wrong. So actually, maybe we're going to go through a really stable period now, and maybe Theresa May will stay, and maybe Brexit will be done by the end of the year, and maybe the market hardens, and maybe you've got it completely wrong.
If I can just add one thing, I think there have been a couple of countries when, following an election, they haven't been able to form a government. There's been a spike in economic activity.
Yeah.
So perhaps all's well.
Right.
I think Spain might have been one of them.
Yeah, who knows? Yeah. So
Politics, if I just may add one comment, politics is really matters for all of us. And we don't have necessarily look at the Brexit, but generally speaking, when we have global programs, for instance, we have to understand that politics can change. Look at what is in Brazil, what was in Argentina, Italy, Spain, etc. So it's a sort of jigsaw, and it's quite difficult all the times to put all the pieces together. But being international as a client, as a carrier, etc., means to understand politics or the political impact that you can have on your business directly in a country, how you run your business, and then we follow with assurance. But so we have to understand locally the situation and be aware that things can change. Not always as we expect, making some wrong assessments sometimes. But of course, that's something important to understand that, okay, things can change. We need to adapt together and run a business in the proper way, timely, promptly react, and adjust what we can adjust. So even in our business as insurer, we follow the core business of the group. We have to take into consideration all the changes, but will be today, tomorrow, and the day after. So no concern, special big concerns.
Thank you. And just to sort of finish my summary then, good point from Adrian. How many hours and days and weeks are used up in debating issues that are interesting, but actually are not something right now that the industry can help with. These are business risks, and let's keep the debate going, but let's focus on what we can do, and then do it really well and do it efficiently, I think is the message that's coming out. So, any questions to the panel? They're able to go anywhere here, so don't restrict it to exactly what we've been talking about. If you've got anything you want to ask about the market or about the situation, we've touched on the politics this morning. I can't see very well, but has anybody got a question? Yeah, at the back there. Could you just introduce who you are first and then the question, please?
Hi, sorry, it wasn't working to start with. So David Bennion, editor of Reactions magazine. So, I spend a lot of time, I know Adrian very well, chatting to people in the market. In my market, it tends to be the intermediaries between insurance and reinsurance, those kind of events. And people do make a lot of chatter about relationships in this market. It's one of the reasons why I like writing about this market as a journalist is the fact that people know each other. There's a nice camaraderie, and I think London is probably the best example of that. People do know each other still, but this whole relationships factor that the market loves to shout about. Someone mentioned earlier turkeys voting for Christmas. Is this not the problem? Because when you get the market talking to the market, you get brokers talking to underwriters, talking to reinsurers. They're always talking about the value of their relationships, but we know that expenses are far too high. London is probably the worst example of this, and it's all because of so many layers of underwriters, intermediaries, and everyone takes their cut. And in the end, the client is left paying more. And how much of their premium just goes on expenses?
Okay.
I just think, is the emphasis wrong when we talk to each other within the market?
Thank you. Summarising the question, this personal relationship, this market, this sort of everybody knows one another. This is costing lots of money, and it's inefficient. We've already heard about people being paid six-figure salaries to stand in a queue. Is that fair, Justin?
It's fair in certain elements. I mean, for the simple business, a lot of brokers have moved that onto facilities these days. Lloyd's is running out a new model that will finally, hopefully, move us into an electronic trading platform. So for the simple, non-complex business, I think it is moving, and the relationship thing is much less prevalent. For the large, complex business, I think most of the major brokers now probably have around about 20% of their portfolios placed on automatic facilities that are full follow. So again, that efficiency is there and much less important on the individual relationships. But our algorithms aren't really clever enough to understand the large complex business, and we can't educate them, at least at this point. And we're very, very concerned that InsurTech can move into that space, and if we can't address it, then people will buy complex insurance in the way that they buy house insurance or holiday insurance. So we're constantly aware, but for some reason, the personal relationship, when setting terms, when looking at soft factors, many complex claims aren't straightforward. If you don't have an understanding or a relationship with the people that make the decision on a complicated business interruption loss, you're going to struggle, definitely. So I think that personal thing is very important. And the only other factor I would put in there is, one of the big struggles we have at the moment as brokers in this overcapacity marketplace is how do we determine signings? How do we determine which are the right markets that syndicate the client's risk? Now, if you're running 100% of a deal, that's absolutely fine, but a lot of the bigger programs are syndicated. And we always say it should be the client's choice, but clearly we have to make some recommendations. And if we don't have personal relationships, if we don't understand who the people are that want to work with that client and want to be the partners and want to help them out when things get complicated and sticky, then we don't really have a proper differentiator.
Yeah, good answer. Yeah, thank you. Any other question? Sorry, did I hear? Sorry, quickly, Antonio.
I would like to have a comment regarding relationship even on a time-consuming basis. Rory was saying that we are a complex organization. So if I may suggest, and we were talking about that together, we need to make it easier. We need to have, if I may suggest, we have complex organizations, and we need to have entry points, first of all, each other. So we have our own organization, you have your own organization, and so on, and for carriers, etc. So many people involved. But if we want to make it very, very effective, our relationship, we need to make it, for me, I was used to say, a very old-fashioned style. I mean, we need to give the human finishing touch to our relationship. So, first of all, let's identify some entry points. I mean, some people representing every single actor in the process. And then I can understand that it's old-fashioned some way. It's trivial, can be seen trivial, but this is not, from my point of view. We need to talk each other simply. And today, I think that the goal of this meeting is the right one, is to talk each other in a very friendly way, and then we can sort it out a very complicated issues.
So in this sector, relationships are critical, but we need to look at efficiency issues. So
and we can save time, we can save money, and we can solve the problems.
Okay.
So the human finishing touch is important.
Thank you, Antonio. Do we have another question, final question from the audience? Any hands going up that I can't see? It's very difficult to see from here. Yeah, we have one over here.
Thank you. Dominic Billy, I'm from the Globus Network, which is the largest insurance network in Africa. I just wanted to speak again after what the client said about knowing each other. And for me, based on our experience, knowing each other means also stop pretending. I'm explaining myself. I think it's clear that one part of the world wants the thing to be done one way in our industry, and it's clear that another part of the world wants to do it the other way. And the problem that we are facing is that that second part is growing. And I think that pretending at corporate level, I'm talking in general terms, that you're going to do the things and you expect the same level of service everywhere in the world, I think we should forget pretending about that. And maybe there should be a common effort to achieve that, because then there would be less people that are disappointed at the end of the day. So that was my comment. Thank you. If you have any reaction on that.
But first of all, Rory, then I'll come to Adrian.
Interesting point that. Obviously, you're representing South Africa, and going back to my earlier point about difficulties of managing sort of global programs, Africa probably presents some of the largest sort of challenges with sort of CIMA code and compulsory reinsurances. And I actually totally agree with your point. But I think what the market sort of lacks in both insurers and brokers is people who really understand these issues, which can actually provide value to Antonio, who can actually sort of talk intelligently about the challenges, about placing, for example, African risks and how they fit into global programs. So I totally take your point.
Adrian?
Yeah, this kind of relates to a point that I raised when we have these discussions about global programs, is that it's all very well saying, well, why is it so darn complicated for me to incorporate the Democratic Republic of Congo in my global program, and why can't you just give me a seamless, super compliant program? Well, actually, it was you that decided to set up an operation in the DRC in the first place. Did you really appreciate the risk that you were taking on before you made that decision? Oh, actually, as a risk manager, I wasn't invited to the discussion when we bought that mining company in the DRC. Yeah. So it's a bit. It goes back to my previous point. Yeah. Ask yourself, you're taking on this risk. Why should everybody else sort it out afterwards for you? The risk manager needs to be a bit more proactive in this front and explain to their boss, do you know what? It's not going to be that easy to insure this risk.
Antonio?
Yeah. It's a very good point, and actually, for me personally, it's very important to have a good combination between a global and a local. You have to understand, from my point of view, I have to understand perfectly what's going on locally. And the local, they have not a good understanding, but they have to be aware of the importance of what they do and how they do it for the rest of the actors. So it works in a dual way, not only one way. So if it can take a long time, for instance, to issue a policy, or we have tax issues, especially for new countries. Some exotic countries can be like for us that we have not a long experience with Africa or Asia, etc. I have the responsibility to understand locally what's going on, to understand the custom first. Because it's no sense to complain and say, to collect a premium, it takes an age. That's really no sense.
I'm just going to cut you there because I've got literally a few seconds left for one more question, and then we'll close the session. Anybody, one final question for the panel? Yes, a lady in the white. Can we get a microphone?
Hello, Annabelle Fiori from If Insurance, PNC. What is the most important thing for you? Is it to have a compliant program, or is it to have a reliable local insurer? Because from time to time, you ask us to issue a local policy in a country where you do not have so many possibilities with local insurers. And when we tell you we can do it, but we know that those companies are not reliable. What do we do? And then we hear, but your competitor was able to do it. So then what do we do?
So
The time is running out, so
yeah,
you
so
can't,
20 seconds.
Actually, we can arrange in 2 years' time
Yeah.
a new session. No, that's very good question. What I mean, having a good career supporting the business is, again, is strategic. It's the most important thing that you have to do at the early beginning, first thing. So spend time to find not only the big name, but the reliable partner. So all of us, we say, we are international, and when you start and you ask for a service, the company in front of you promise to do the best, to deliver everything in time, it will be cheaper than competitors and so on. So then you have to meet the expectation. Long relationship, again, we trust much Mapfre, we trust other partners. I don't want to say counterparty. I want to talk as partners.
Okay, sorry to have to cut you short.
Reliability, yes, but they have to prove to be reliable.
So thank you very much, audience, for listening to us on an early Friday morning after a party. It's not easy. These guys have come a long way, and thank you, all four of you, for your contributions. We'll be around at coffee for any other questions you might have. And so we'll close it on that. Thank you very much.